Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today. Well, it's the start of another week, but the week gone by has been yet another painful one for the Nifty. Remember, the Nifty ended in the red for the sixth consecutive day. And we've actually seen this long weekend pass by. Remember, for the markets, especially the Nifty, we've seen it shut shop about 26 points lower to settle at 23,533 odd levels on Thursday, while the Sensex fell about 111 points to close the day at 77,580. This was the Thursday's trading session before we went on for the long weekend. Remember, markets delivered yet another negative, week. This was the second consecutive week on the negative note for both the Sensex and the Nifty. They both declined about 2% each as well. All the sectoral indices also declined except for the Nifty IT that posted kind of negative returns. Remember, with PSU banks and metals, they've fallen by about 5% in the week as well. And we've also seen most of the stocks also dragging lower in trade this week in terms of the Nifty stocks. The index has already corrected about 10% from its record high levels, which means that it has entered a correction territory. And the investors are now getting nervous about as to what is the way ahead. Will we see sharper, deeper or longer time frame corrections from here on, or will we see any signs of recovery? Now, for this new week, remember, this is also going to be a shortened week or a truncated week because there will be a holiday on November 20th, and this will be in observance of the Maharashtra Assembly election. And earnings season is largely concluded with the last of the earnings that we will be tracking for reactions today. Of course, attention will shift back to the FII flows, which have also been on the negative note so far. They've already sold about 1.4 lakh crore rupees in the cash market till date. And of course, there have been net sellers in every single session in October and the onset of November as well. So the relentless selling from FIIs has been absorbed nearly dollar for dollar by the domestic institutions so far. But again, the question, what's next? Of course, we did see on November 14th, that was the last day of trade that we saw before the long weekend. The FIIs were net sellers for the 34th straight session. They sold about 1,850 odd crore rupees. DIs bought about 2,482 odd crore rupees right there. As far as the global setup is concerned now, which will be working as cues for us in this morning trade, we've seen that the US markets, they ended lower on Friday, that is November 15th, as well as there were concerns over interest rate projections going forward from here. A sell-off in the pharma stocks also weighed on the sentiments. IT stocks also tumbled as well in the US market. So we've seen the Dow Jones fall about 0.7% in trade. NASDAQ declined by 2.2%. It was the mega caps and those, big seven that we talk about, including Meta, Netflix, Nvidia. All of these stocks were also lower in trade. When we talk about the S&P 500, that also dragged by about 1.3% as well. Of course, investors are now further cautious as far as the policy expectations are concerned going forward from here. There were indications from Jerome Powell that they are not in a hurry to cut interest rates. So that's also going to be something that we will monitor from here on as well. Asian markets also opened on a weaker note this morning following the trends that were being seen on the Wall Street. So the Nikkei fell by about 1.1% right in the morning trade. Topics declined by 0.6%. Kospi was, however, on a positive note. We've seen about a percent gain, but the Kosdaq slipped by about 0.6%. The ASX 200 also began the day lower by about 0.3% in trade. Now, as far as the gift Nifty trends are indicating, they are actually indicating another gap down trade down by about 113 odd points at 23,488 odd levels, because we've actually seen a weaker handover right there. But it's just the right time. We will be looking forward to welcoming our top guest to help us understand the market cues for this entire week and how should we really look at it. Mr. Chakri Lokpriya, the managing partner at Red Strawberry LLP, is now with us. Warm welcome to you, Chakri, and thank you so much for taking the time out. Well, another week, and I think the big question that investors have on their minds is that now that the earnings season is gone behind us, what are the triggers that the markets will be latching all to, or will we have to see furthermore longer time frame of correction in the markets? What's your sense?
Good morning. Thanks for having me. You did an excellent summary of what the market conditions are currently about. And if you look back at what has happened with the earnings so far, Nifty earnings as an index has grown about 4% year over year, which means companies are growing only at best in line with inflation, which means there's no real growth. Second, the expectation was the earnings would grow. That is about a year ago. The earnings would nearly 15%. So that has not happened. So which means companies have missed earnings by about 10%. Market is down 10%. Is the market overvalued? No, I don't think so. And whereas some sectors have, like your power, metals, consumer, these stocks sectors are down anywhere between 15-20%. And some of the PSU stocks are actually down good 40-50% from their highs. So that way, there is no froth in the market, but is there now what we need to look out for is a trigger, and which will take the market up, a fundamental trigger that is, which is earnings growth.
Absolutely. Now, Chakri, do help us understand as far as the FII flows are concerned, what's the sense that you're getting? 1.4 lakh crore rupees have been pulled off, but like I pointed out in my commentary, dollar for dollar, we've actually seen money pouring in from the DIIs as well. How long do you think DIIs will continue to have this strength to continue to prop up the markets on their own? And do you think even they will lose confidence midway? Or do you see the stance that we actually saw over the weekend from CLSA, the indications that they are not going to be so much favoring China and focus will come back to India? Will that be a trend that we will see for larger FIIs?
I think two or three things. One is at the most basic level, FPIs or FIIs look for earnings growth in emerging markets. So earnings growth needs to be faster than that of the developed markets. Now, if you look at the US S&P 500, earnings are growing north of 15%. India's earnings are actually growing far slower. So that opens the risk of currency risk for FIIs. Rupee has fallen, so which means net dollar returns for FIIs also go down. So therefore, it's essential that earnings growth returns back, and for which you need some kind of invigoration, maybe an interest rate cut by RBI. You need some catalyst like that, which is essential to make it easier. Because if interest rates come down, then companies' profitability goes up and therefore supports a higher multiple. But that is the catalyst we need to look out for.
Right, but Chakri, like you pointed out, we saw last week the inflation figures have again been on an upside and over 6% kind of a retail inflation. Now, do you think that will again put the RBI on the back foot, even if there was some thought behind looking at what the US Fed was doing, that probably in the next meeting there could be some indications, if not immediate cut? Will that get pushed back just because the inflationary pressures, they continue to soar and all the problem continues to soar because of the food inflation factor, which is only going to rise for the second half? That has been the trend.
You're absolutely right. The RBI's comfort range is, let's say, 4 to 6%.
Yeah.
Inflation is the higher end of that 6%, but very close to that 6%. Now, we also need to take into account the fact that RBI and the rest of the world, central bankers increase rates really fast. So India has gone up by about 250 basis points in a very short period of time. So consumers are feeling that stress of those higher borrowing costs. So now to offset that, rates have to come down equally fast to revive a consumer or a corporate. Now, food inflation is one thing. So there are other government measures that the government can take. So I think RBI on one hand, but of course I understand the commentary is like rate cuts will be probably in February. But I think some kind of measure is needed to control the measure. It can be coming from the government side too. But that kind of measure is essential for what you call the borrowing costs for companies and consumers to come down.
Okay, point taken there, Chakri. Now tell us, in this, after this 10% downtick in the markets, are valuations in some of the pockets looking attractive to you, or do you think some more excesses need to be taken out when you will start getting aggressive into the market in buying, across the segments? Or are you already finding some pockets where at least one should start nibble into?
You're right in terms of, after the fall, because some of the sectors are down and stocks are down quite a lot.
Yes.
So that kind of, many stocks, the defense, railway stocks, industrial stocks are all down a good 30-40%. All the banks, Frontline banks are down a good 10%, etc. Media, power, utilities 15%. So there has been a fairly significant fall. So that way, there is no need for what you call, oh, there would, so therefore there wouldn't be a deep correction from current levels, but it could be a very listless market waiting for the next catalyst to come by. So until then, I think the sectors which are not impacted because of the India slowdown, like IT, are the sectors that are safer in the current environment.
Okay, but do you really see this continuing? How much more downside beyond this 10% do you really see on the Nifty? Would you rule out a bear market, a 20% downtick from top?
20% is very unlikely. I think 10%, because the individual sectors have fallen much more. Overall, things have kind of stabilized. Valuations are not really expensive at current levels. But what is needed is that, if you're buying a stock or a company for the future, that future growth should be rosy enough. And that clarity only in some of the export sectors, because the US is doing really well now. Trump back in power, corporate friendly measures, and therefore greater IT spend, and that's good for Indian IT companies. So I think that's the way we would like to approach it, is look for pockets of growth.
Okay, so tell us any key pockets where you have bought in this recent 1.5 months odd, any key stocks or sectors which have now started to look attractive to you?
One is clearly IT. If you look at all, whether it's Meta, Amazon, Microsoft, all these companies have said that they're going to spend huge amounts of money, 30-40% rise in cloud spending. Now, cloud spending is a very important component for Indian IT companies. So that means Indian IT companies' cloud related revenues should grow north of 35-40%. Second is in terms of their valuations are very much in order. So I think clearly there is, with new growth, rather growth acceleration coming back, one can clearly buy those stocks. Second is, the power utility sectors in India are domestic, purely domestic, but they are more secular in their growth, because power is needed for everything. So some of them have also corrected. NTPC, REC, Power Finance, and some select, like for example, upper end consumer. This is what we would buy.
Okay, understood. How about, the big heavyweight names like Reliance Industries? They are now sitting on a net negative return for this year so far. After this recent correction, and this is despite the bonus announcement, all the buying from the retail investors that happened in anticipation that probably after this the stock would go up, but it's now absolutely on a net 0% kind of a return. Will things start to get better from this level? How long before we actually start to see substantial upside on Reliance Industries, and how should one approach it now?
Reliance Industries is clearly a stock which is very attractively valued, because if you take those 4 different components, which is its oil and gas, retail, telecom, and new energy, and if you add each one of these bits, then and roughly most of their earnings come from oil and gas. That's 80% of the business, and that's been very volatile, with oil prices going up and down, refining margins therefore going up and down, and the other 2 businesses like telecom and retail are doing all right. There is a retail slowdown that is more cyclical in nature, whereas telecom is doing fine. The bit of it which is not valued at all is new energy, the Reliance New Energy initiatives. So if you add up all that, I think there is a significant amount of upside for Reliance Industries. But right now, it also needs a catalyst. And what is that catalyst? Could be, again, if oil prices are currently going to remain in check. So I think Reliance Industries is worth looking at.
Okay, Reliance Industries is worth looking at. The markets have it pre-open. We had that opening pre-open tick at 368 points higher. That was wonderful to see, 23,900 in the pre-open rate, but it's quickly come down. Remember, the Gift Nifty is already indicating at a muted start or a negative start, but 133 points higher. If this happens, it will be a great start to the week for the markets. 23,664 currently on the Nifty. Let's look at some of the heavyweight counters where the action could be seen. Let's look at Reliance Industries. We just started to talk about it, how this one is opening for this new week. Of course, there are triggers as well. With Disney, they have completed the transaction as well, and they have formed a JV for entertainment brands, invested about 11,500 crores in the growth capital right there in the JV. The JV will be spearheaded by 3 CEOs. The transaction values of JV are at 70,352 crores on a post-money basis. So Reliance Industries is something that we will be definitely looking at. JV is controlled by Reliance Industries, owned about 16.34% by the company, 46.8% by Viacom 18 and 36.8% by Disney as well. So that's as far as, let's pull up the stock of Reliance Industries in the pre-open to see how it's opened. Yeah, 0.4% higher at 1273. So there could be a opening in the positive. Let's also look at the other heavyweights. Let's look at Infosys. Let's also look at TCS, HDFC Bank, ICICI Bank. These are the heavyweight spaces that we have to continue to look at. Infosys is indicating a positive start, 1.7% higher at 1896. Let's look at ICICI Bank is actually indicating a lower start, about 0.8% lower at 1246 odd level. So that's how some of the pre-opening trades are getting settled. Let's also look at some of the earnings reactions in the pre-open, and then we can look at the opening levels as well. So HDFC Bank, that's a strong uptick that is being indicative, 2.3% higher, 1732. Let's look at Grasim Industries. The earnings have come in, although the profit has actually declined by about 45% there at 1100 crores. Margins have come down lower by about 200 basis points, and there you see 3.3% decline for Grasim, 2440 right there. From the auto space, let's look at Hero MotoCorp. That came out with the numbers. Revenue up by about 10.5%. EBITDA improved by 14%. Margins came in at 14.5%, higher than the previous year's same quarter. 6.5% higher for Hero Moto, 4,904. That could be an interesting number to look at when the markets open. And then you can also look at Muthoot Finance. Let's look at that one too. Here the net profit improved by 20.5% at 1321 odd crores. Total income up by 36.5% at 4,957 odd crore rupees. And they've also approved additional infusion of 500 crores in the arm of Muthoot Money right there. So 4% higher for this one as well on strong set of numbers. Income and profits both have beaten the estimates that we had on the street. Let's look at some more numbers like Honasa Consumer. Now here, the company has reported a net loss of 18.5 crores versus a profit of 29 crores. This is on a YOY basis, 7.5% lower. Disappointing set of numbers coming in. 343 is the 315. 15% lower. You can quickly see that sharp downtick coming in on Honasa. It will be important to discuss this space too. Revenue has declined by about 7%. EBITDA also loss has come in at 7 crores. So both operationally and the bottom line, you've seen the company start to report losses yet again. Delivery from the the new age space. Delivery has also come out with the numbers on a Q-on-Q basis. Revenue has been flat. EBITDA has been down 40% and EBITDA margins are down by 181 basis points. Net profit has also declined sharply as well, but it's still in profits and at 10 odd crore rupees. You can see an uptick right now on delivery of 2.2 odd percent right there. So those are some of the numbers that we could be really looking at. But Chakri, coming back to you, when we were discussing this new age stocks and the numbers that have been coming in, so much to discuss here. First, let's discuss on the numbers itself. Any promise for Honasa? Nykaa came out last week as well. Delivery has come at now. How are you really assessing the numbers that are coming in beyond Zomato, beyond PB Fintech or a Paytm, which have been on an upward trajectory? How are you looking at this second rung?
Yes, as far as the first rung is concerned, I think we've Zomato is trading at the valuation which is more than double that of Swiggy. Then Swiggy is clearly worth looking at the current prices. After all, both of them are market leaders and both of them have more or less similar shares. Swiggy has slightly more losses than Zomato, but it cannot trade at half the valuation of Zomato. So Swiggy is worth looking at. Now, second rung, Honasa. They've had losses, gone from a profit to a loss. And partly because, the company is changing its business model, it's moving away from its distributor model, it's changing it from, and that transitions usually can cause a lot of disruption. And I think so, therefore, until those disruptions are in place, which will probably take a year, quarter or two, it's best staying away from that one also.
Okay, got it. So that's as far as the new age space is concerned as well. Anything from the new IPOs that are coming in NTPC Green? Would you be really looking at that? That opens tomorrow. And how should one really look at? Of course, for those who really wanted the shareholder quota, should have invested a little earlier. Now that proposition is gone. For those who have it, can apply in 2 quotas. But what about those who are looking at NTPC Green as a fresh opportunity?
NTPC Green clearly is, extremely well positioned. Valuation, that is the proposed IPO valuations are also very attractive. The company has probably about 3 gigawatts of renewable energy, adding another 8 gigawatts. So the numbers are big. From 3, it's jumping to 8 in the pipeline. I mean, 8 under construction, and then adding another 10, which is in the pipeline. So the company is going from 2 gigawatts to 20 gigawatts in a fairly short order of time. And that kind of gives you a good clarity of growth for NTPC Green for the next at least 3 or 5 years. So therefore, one would clearly try to invest in NTPC Green.
Okay, got it. So that's as far as NTPC opportunity is concerned. The markets have settled in the pre-open trade, indicating a 72 point of an uptick at 23,605. That also will not be too bad, looking at what we have faced in the last week as well. A 0.3% of the uptick. But let's look at how the markets are positioned. So the Nifty, we've already shared. All the sectors barring media and oil and gas actually look at an opening which could be on the positive zone. Real estate index could be looking at a 1.5% uptick. Metals also could be in the limelight. Hero MotoCorp could be seen as a top mover on the Nifty, a 5% uptick on this one. Of course, the earnings have been a key trigger here. Hindalco, NTPC, Sun Pharma, Tata Consultancy Services as the top movers on the Nifty right now. We're also looking at the PSU space also up and about. HAL, for instance, is up by about 2.5 odd percent. Of course, here the trigger is that brokerage houses have come out with fresh targets on HAL as well. And Jefferies has a buy rating with a target price of 5,500 on HAL. Right now, it's trading at 4189, which means a substantial upside is what they really see. Of course, they are positive on the earnings that have been reported, both on the EBITDA and the margins front right there. And one needs to really keep an eye out on that one. Apart from this, let's also look at some of the other stocks. Let's look at DLF, for instance. CLSA has an upgrade on DLF. It's upgraded the stock to outperform, raised the target price to 870. Now, what they are positive about is 2.2% higher for DLF, is that they believe the property brokers in NCR market have indicated that DLF has received expressions of interest for 100 plus units out of the total 420 units worth 80 billion rupees in its uber luxury project, the Dahlias, right there. So we will be keeping an eye out on that too, as far as the space is concerned. In the broader markets, what seems to be taking shape, there are several of the stocks that we could be looking at. There is Muthoot Finance that we marked, that could be in the positive zone. We have Kernex Micro, that could be in the positive zone again. Another 5% uptick. Hero Moto, we've already discussed, that could be in the positive zone. Kalyani Forge. These are some of the stocks that could be really looked at in the opening too. Not too many names though in the pre-opening that we could take, where one can really figure out how things could move in the positive zone. Beyond the top 5 on the Nifty, you also have stocks like Power Grid, HUL, Tata Motors, HDFC Bank also indicating a positive start right there. What we will do is we'll be looking forward to speaking to Vaishali Parekh now, who's also joining in on the show, and soon we will be discussing with her how the markets are shaping up. Vaishali Parekh is with us, Vice President Technical Research and Analysis at Prabhudas Leeladhar. Good morning to you, Vaishali, and good to have you with us. How are markets really looking at for this new week, which is again going to be a truncated one, and where should one keep their eyes on, Nifty or the Nifty Bank?
So very good morning. Yes, so market we have seen, we were just doing the analysis and I think nearly 10.5% correction has already taken
Yes.
place. So Nifty currently is on a near-term support of 23,500 and we are seeing a minutely positive start. So unless and until we see a continuation in bounce back about 23,800, I would say this is just a bounce back. The bias is still corrective. So for this week, I would say there is a range of 23,200 as support and 24,000 as resistance. And Bank Nifty also, near-term support was at around 49,800, 49,500 levels. So my range for this week would also be 49,500 as support and 51,000 as resistance.
Okay. Any key stock ideas that you could share with us, Vaishali, that you're looking at for today?
So yes, there are a couple of stocks which have technically come at a good support levels. To name a few, I think Kotak Bank is one of them. 1680 was the support, and that's what we witnessed last week, a good corrective move taking place. So also is the case with Tata Power. 390 was the level that we were looking at, and I think it was pretty much there. As you remember, last time we had spoken that realty sector was on a corrective mode, but we are seeing good correction already set in DLF and Oberoi Realty and all. So DLF also 730 acts as a very good support level, and from there on, we saw last week there was a low made of around 743 level. So I think these are the stocks which currently look good to start accumulating. And stock with the positive bias, what we saw from Thursday's close is, of course, Indian Hotel. So Indian Hotel 710 would act as a support, and 780 is the next project.
Okay, Vaishali, we'll keep these two stocks in mind as well. Let's get back to Chakri also, have him included in the conversation. We've discussed a lot of factors. I still want to have that expectation that probably by December end we could get a Santa Claus rally, we could get some cheer coming back into the markets. Is that a possibility? And should one start aiming to at least nibble into some stocks for that Christmas cheer to come back to the portfolios?
Yeah, given the fact that we've already corrected so much, so I think, we should hopefully be in time for the Christmas spirit cheer to come back. Simply because, we have corrected and, not just 10% at the Nifty level and much more in individual stocks. And also by then, in early December, you would have had the RBI decision on rate cuts. So you'll have far more clarity on where earnings will be revised. And so and still, because now globe is looking far more settled after the Trump has come back because
Yeah.
US companies will grow. So export companies from that perspective would also benefit. Indian companies like IT, pharma, textile companies, all these companies would benefit.
Okay, got that. What we'll do, viewers, is we will be waiting for the markets to hit that opening bell, and we will shift focus to the key stocks and strategies that you can be having on the markets. Remember, 23,605 is where the pre-opening trade had settled in, about 0.3% higher in trade. Let's see how it really moves in from here onwards. Again, a truncated week, so after today and tomorrow there will be a break. So we don't know. Okay, it started to move. 23,558 right now, flat. Absolutely, the markets have turned red just with the opening tick itself. A very, very volatile set of trade. Let's look at the key stocks. Hero MotoCorp opens with about 3% gains. You have Hindalco that's open with 3%. NTPC about 0.7% higher in trade. Let's also look at how the heavyweights are doing. Infosys, TCS, ICICI Bank, HDFC. Let's look at how are these stocks really moving in trade. So you have a whole host of move that's coming in across the board. TCS is opening with 1% gains coming in. So some stocks are within the IT pack also gaining, but the index is actually down by about 0.7% in trade. Real estate is the sector to look at, 1.8% higher in trade right now. Metals also are shining bright. So along with Hindalco, there are several others. So Nalco is up by 6.2% in the opening. Vedanta up 3%, Welspun Corp 2.5% higher, Hindustan Zinc about 1.5% higher, Jindal Stainless also up by 2%. Steel Authority, Hindustan Copper, NMDC, they're all in thick trade. Nalco is the top mover even in the F&O segment. Apart from this, Muthoot Finance is gaining a lot of ground in the F&O space. Over 6% gains can be seen on this one. Crompton Greaves Consumer is something that is also higher by about 4% right now. That's the space to watch at. So metals, realty, consumer durables pulling up in trade, 1% up. PSU banks, let's look at this one too. Which are the stocks that are contributing? PNB, State Bank of India, Punjab and Sindh Bank, about 0.5% to 1% gains, not very meaningful gains coming in on that front. Let's look at the broader markets. Are there any interesting names that are coming in on that front too? RPP Infra is up by about 6%. You have Acme Solar, a recently listed stock, 5.3% higher. Then you also have stocks like Avanti Feeds, that's up 6%. Muthoot Finance, we've already named, 6% higher. Rajesh Exports, the VIP Clothing, that's up 6%. Gala Precision Engineering, another 6% higher in trade. Everest Kanto is up 6%. Banco Products, these are the kind of stocks that are actually inching up within the Nifty 500 list. But in the Nifty Next 50, HAL is moving up 3.5% higher. You have Varun Beverages coming back 3% higher. PFC REC, something that Chakri alluded to earlier. He's positive on these two spaces. Both are up by about 1% in trade today. We have DLF that Vaishali's pointed out, 1.2% higher in trade as well. Zomato is up by about 0.6%. Let's also pull up Swiggy to see how that one is opening in this new week after making the debut last week as well. Zomato is up 0.6% at 271 odd levels, and Swiggy is down by 0.7% at 429 right now. So that's as far as the opening trends are concerned. Vaishali, what looks good in the open?
Well, as you were mentioning, HL, it is a good level to accumulate. And I think we are looking at Titan. So Titan also technically has completed its corrective move. So I think these are the levels for a for a positional trade, a longer term perspective. I would not really call for a trading strategy because market is quite still in the weak bias. So accumulation would be the level. In fact, even HDFC Bank is looking quite favorable. So today's move, what we are seeing, HDFC Bank and HAL.
HDFC Bank and HL right there. Okay, got that. So those are the key stocks that you could look at. Muthoot Finance is definitely an interesting space. Let's get back to conversation with Chakri also on this space. Chakri, we've seen both Muthoot, Manappuram Finance really have the best of the times when the entire move on gold was seen. Are they still, constructive at this point in time? Should one continue to lap onto them?
If you look at the results of Muthoot Finance, the numbers were very good. Net profits was up, I think, about 20% and margins improved, against a face of, far higher competition. The stock has corrected a lot in the recent past, and therefore, I think it's definitely worth looking for a positional investment current levels.
Okay. Honasa Consumer, let's pull up that one, 20% down after those disappointing earnings have come in. Remember, net loss of 18.5 crores, EBITDA loss of 7 crores. For those who've been holding this stock, what would be the advice, Chakri, on this one? Should one stay away right now till the time clarity emerges that we are on a stable footing as far as the earnings are concerned for Honasa? What's not working for them?
As far as new investors are concerned, it's best to one stays away, simply because when a company is going through its transition of its business model, it takes time for it to settle down. So until then, I wait by the sidelines.
Okay, but Brain Beast Solutions, the parent company of First Cry, is something that's actually inching up in trade, and this is as far as the results impact is also concerned. 3.8% higher, 538 right now. Let's look at delivery as well. We had pointed out the earnings. Again, a disappointing note right there. But let's see how the stock is moving. So First Cry is up by 4%, 540 right there in front of you. Let's look at delivery too. Absolutely flat, 331, but not too much of a reaction on the downside on this one as well. The other thing that we should be really looking at, Vaishali, is how should should we really look at this entire city gas space? And I would like even Chakri's thought process on that. There is further reduction in the gas allocation, and all these stocks are crashing in trade today. IGL down 10%, MGL down 10% as well. Let's look at a GAIL to see how things are really reacting on that one. Sharp downtick coming in. Vaishali, first to you. Technically, what should one be really looking at here, or right now no reaction should be seen? Okay, I think Vaishali we've lost the connection with. I'll come to you, Chakri, for that one. Chakri, how would you look at the city gas distributors?
Yeah, if you look at GAIL has basically, cut, volumes to these companies by anywhere between 13 to 20 odd percent. So that's the amount of volume loss that straight away happens to all these companies. And therefore it's not surprising the stocks are down as much. Now, so which means there's also resulting operating loss and resulting in, operating margins loss for these companies. So it's best to stay away from city gas distributors.
Okay, better to stay away from city gas distributors as of now. What is pulling up also along with HAL is BEL. That's also up by 1.2% higher in trade. So some of these names are coming back. Chakri, you also pointed out some of these stocks have actually had sharper correction, like 30, 40 odd percent. Are HAL and BEL looking good to you at this level?
Yeah, indeed. Both of them, Bharat Electronics as well as HAL, have order flows that are intact. The earnings have been good. There has been a margin uptick. Stocks have corrected quite a bit. So therefore, definitely worth holding on to, or even nibbling a little bit at current levels.
But should one still stay away from the shipbuilder space? Those have been, the bigger punching bag of the markets right here, because the rally was far more sharper in those. Should one still stay away?
I think so. Simply because, they've run up to quite a lot. Of course, there's spread in what they've ran up, but, these are extremely long cycle orders. Building a submarine and ship takes many years. Getting an order for that takes quite a long time. So I think it's best to stay away in an economy which still has to turn course. We have to turn course from the interest rate cycle. So let's wait and watch.
Let's wait and watch on the shipbuilder space. Okay, Vaishali is back with us. Vaishali, metals are shining bright, 1.4% higher for the index, and several stocks right there that are holding up good. Hindalco in the Nifty space, 3.5% higher. Nalco as the top mover in the F&O space as well. How are you looking at this metal move? Should one be really looking at it as a tactical trading bet?
So I would definitely say that yes, metal is showing bounce, but what is important is there has to be a consistency and a follow-up. Yeah. My strategy right now I think we are pretty much coming closer towards the bottom as far as the broad-based Nifty is concerned. So according to me, a dip from here on should be used for accumulation. Trading is very hard to tell because levels are also not for sure that are they holding on or no. So, but for a longer term or positional trade, I think one can hold on.
So on Nalco, what should one do?
So Nalco, I think 220 is the support level, and right now it's 233. So buy with today's low as stop loss, and if this trade goes right, I think this can go towards 240, 243.
Okay, got that. So that's the view that's coming in. Okay, Chakri, what we haven't discussed is the banks really. I want to understand what's your thought process right there between the private and the PSU banks. Do you see after this correction has played out, time to look at even PSU banks is coming in? Of course, one should definitely look at the large cap banks, which are now outperforming. But what about the PSU banks, which were one of the biggest chunks of the portfolios, retail portfolios, about 6 months back?
You're right, absolutely. In terms of, but the good thing is if you look at PSU banks, whether it's Canara Bank and the mid cap or State Bank, the market leader, they've had very good earnings results. In terms of NIMs falling, that is common for both private as well as public. In terms of down to deposit growth, common for both, for the entire sector. So given that, whereas the book far more stronger is clearly in the case of SBI, Canara Bank, Union Bank, the books are very clean. And therefore, as the interest rate cycle turns, that's when we will begin to see. So it's worth nibbling at because they're all trading at very good valuations.
Okay, got that. All right, what we'll do is, Chakri, we'll thank you on that note for being with us on this special edition to share with us all those thoughts and ideas like you always do. Always appreciate your time with us on Business Today. Hope to see you very soon. Until that time, I hope you all the very best. Thank you so much. All right, and we'll continue our discussion with Vaishali viewers now. We have a whole host of pockets that could be discussed, but the markets are now slipping lower, and I will tell you 23,490 is being seen right now and 0.1% lower. What slipped in the red is the IT space. Look at that one, 1.9% lower for the index as a whole. So that one heavyweight pocket has slipped into the red. We also have the broader markets that slipped into the red. 0.4% lower for the small caps, mid caps down flattish with a negative bias. We have both private and public sector banks now slipping into the red. We have FMCG and pharma that have also slipped into the red, along with the Nifty bank and the oil and gas index as well. Very few pockets, metals, consumer durables, financial services and autos still holding up onto some gains. Metals have a meaningful over 1% gains, realty about 0.7%, half odd percent gains for consumer durables. But quickly you can see a lot of pockets turning lower in trade right there. Vaishali, let's start off with two pockets. We'll talk about IT space first, 1.9% lower. Should one be really looking at this one as an opportunity, or this could be, further downward pressure that one could see on IT space?
I think IT overall the trend has been good, but a little bit of corrective move is expected. So, I think let's wait it out.
Let's wait it out on the IT space right there. In fact, there are no winners on the IT sector right now. All the stocks are down in trade as well. Let's pull up some stocks. I was trying to look at the constituents in the winning trajectory. There was nothing. So you see stocks like a whole host of these counters. I'm sorry, I pulled up something else. Let's look at the key counters right there. Yes, LTI Mindtree down 3.7%, Infosys down 2.7%, 2.3% lower for Wipro, Emphasis down 2.5%, L&T Technology Services down 2%, HCL Tech down almost 1.5%, TCS also down by 1.5% as well. So IT stocks are definitely creating that pressure on the downside for the markets, now 0.2% lower for the Nifty as a whole. Let's look at the mid and the small caps. Vaishali, how would you really look at the broader markets right now? Buy the dip, or do you see further downtick?
So I think let's wait because market has just opened. But if you see Nifty breaking 23,430 or so, I think
Yeah.
there is a downside going towards 23,250. And I think there is still one open target of 22,500. So I don't want to sound very pessimistic, but yeah,
Yeah.
that looks quite a probable
No,
downward
very
slide.
true. Very true, Vaishali. You rightly pointed out, because the trend right now is indicative of perhaps getting under the pressure. You can see 23,475 now. You've said 23,430 is something that we should be keeping a keen eye out on right there. Where do you see support is only metals, realty, consumer durables, autos, for instance. Let's discuss the auto counter, Hero Moto. How would you really look at this one? It's been a bright spot after the earnings, 3.9% higher. Should one really look at it?
As I said, these are just bounce backs. So, they are all at support levels and we are seeing a bounce
Yeah.
back. So, I would say let the correction really get over. No point, really bottom fishing. I think 22,500 is quite uh, probable on the cards, or maybe 23,200. From there on, I think one should start accumulating. I don't see, let's see, even Nifty is not ready to give a bounce back right now. So, not in a hurry.
Okay, 60 points now down on the Nifty right now. Let's look at some other key pockets that we could be discussing. On the downside, let's see where the pressure is emerging on the F&O space. Again, you have all the city gas distributors, IGL, MGL, Gujarat Gas, sharp downticks. IGL is now down 15%. Gujarat Gas, Mahanagar Gas, 7-10% lower in trade. Vaishali, a no-go area right now for the city gas distributors. Of course, this is news-led, but for longer-term chartists, what does this mean? Downtake of 13-15%?
So, I'm looking at the weekly chart. The trend is really damaged, and I think we can see still some more corrective move coming in. I'm looking at IGL and all. Right now it's really very corrective, but let's wait.
Right now we can see some corrections that could be coming in. Are there any pockets that we could be discussing on the positive side? Zomato is up by about 0.8% in the broader markets. You have Samvardhan Motherson showing slight upticks right now. Then you have stocks like Varun Beverages, that's also up by about 2.5%. Indigo is up by about 0.9%. Macrotech developers along with DLF is also moving in the positive zone. United Spirits is up by 0.25% as well, but very far and few between stocks in the Nifty Next 50 that are also holding up into the green right now. Banks are also creating pressure. HDFC Bank, however, what Vaishali pointed out, 1.3% higher in trade, 1750. Vaishali, HDFC, ICICI are the only loan private sector banks that are holding up in this week's setup. How should one look at it?
So HDFC still has its trend intact. So I think 1680, 1650 acts as a support. And right now we are seeing some buying happening in this. So I would say, again, accumulation or wait. Because I'm not clear on the market trend itself. I mean, we are seeing the slide.
Just as how the weather is absolutely unclear right here in Delhi, we can actually see a lot of fog, smog, blurring our vision. Markets are also creating that confusion as is the clear direction in which that could be really moving in forward from here. And of course, we have that truncated week factor that will also be playing out as well for all the traders to really take note of on that front too. Okay, one stock which is interesting is Crompton Greaves Consumer. After a long haul, we can see some move coming in that's pulling up the consumer durables index also today. Vaishali, we did see the festive demand was not very good as per the comments are coming in from the managements. Consumption, especially in the urban areas, have been pointing out towards weakness. How are you but looking at these stocks like Crompton Greaves or a Voltas right now?
So talking about Crompton Greaves, I think the results were also pretty decent, and purely on technical terms, we have seen a decent amount of retracement taking place. So say hypothetically, I mean 485 was the near-term high, and from there on, we are seeing the stock corrected. So currently, it is at a cluster of moving average support. So I would say the support lies at around 360 levels. It is a good buy at these levels. The view gets negated about 350, below
Okay.
350.
Okay, got that. Two pockets let's discuss. One where Vaishali has already given her view on Titan. That's the gold space that seems to be in the thick of action today. Remember Muthoot and Manappuram Finance, we've already discussed. There is an earnings factor for Muthoot that's been promising, and that stock has actually been doing well. But the entire gold related stocks, jewelry related stocks are also doing well in this market. Lipsa Gems, for instance, that's up 2.5%, and I think that has to do with the tick on the upside on the international gold levels yet again over the weekend too. Senco Gold is up 2%. We have Kalyani, PC Jewelers, Kalyani Jewelers. We also have Titan that's holding up in the positive zone right now. Anything beyond Titan also that you're looking at within the gold and the gold jewelry space, gold financing space, Sky Gold? These are the kind of stocks that are actually doing very well today.
So actually, for some time back, we were focusing on TBZ and also they were doing very well, but not for now. Right now, Titan is the only stock that we are looking at.
Okay, we are nearing 100 points down on the Nifty, viewers. Keep an eye out on the Nifty. We are slipping after that 15 minutes are over of the opening. You can actually see a trend that's further pointing downwards. 23,440, 90 point of a downtick coming in. Let's see where it goes for the Nifty going forward from here. The other space is the power space. You know what is pulling up is Suzlon Energy, almost 4.8% high after a long haul at around 59 odd levels. Vaishali, is the worst behind in terms of correction for Suzlon? I mean, I know this is one story that's risen from single digits, from double digits, lower double digits to all the way up to almost 80 odd levels. How are you really looking at Suzlon coming back after that recent correction?
So currently what I'm looking at the weekly chart, the trend is intact. This is just a regular retracement. Even on the daily chart, we are seeing that yes, it did for some time breach the 200 period moving average. But I would say the risk reward ratio over here is favorable. 50 would act as a good support. And once we see a stock surging above 62, 63, I think then it is the end of the downslide and one can start considering this.
Okay. Vaishali, again from the new age space, what's something that I asked Chakri also, I'll throw to you as well. There is a complete mixed contrast here. We have a Swiggy and a Zomato, which have, of course, Zomato has been proving on fundamentals on earnings front as well, and the stock has actually been an outperformer. Swiggy has just listed, and after listing also it's shown promise. Today there's some profit taking, but for the others, the second rung of the new age space, talk about stocks like Honasa that have declared poor set of earnings, net loss after reporting profits last year, same quarter. And that's where you can see a 20% downtick. Delivery, which has delivered yet another set of disappointing earnings, it's flat right here. How are you really looking at those beyond Zomato and Swiggy or a Paytm, PB Fintech into these new age tech space?
So we have discussed Paytm. Paytm is out of the woods. It is showing strength.
Yeah.
Currently, once again, it's a bit of a subdued move. We are seeing a good profit booking coming emerging over here. So I would say the trend is intact as long as 680, 650 acts as a support for a long-term period of looking for a target of 900 and so on. So, well, it's already done a good run-up. So right now, market being weak, we are bound to see some corrective move coming in this as well. But 680, 650 should be the level to look at. If those levels break, then it's the damage to the trend. But I do like Paytm. And as far as Policy Bazaar is concerned, I think let me just have a look at this chart and I'll just come back to you on that.
Sure, absolutely. Meanwhile,
So
I will
Policy Bazaar.
yeah, yeah.
Yes, so I think it is showing strength because it has gone through a long consolidation. A consolidation right from, I would say, September to now. It's just hovering in a range of, say, the resistance is at around 1780, 1800 levels, and the support is at 1600 levels. So that is the range what Policy Bazaar is looking. And today's candle looks quite promising. I think this is worth having a look.
Okay, got it. So we'll keep an eye out on these key stocks from the new age internet space, but keep an eye out on the markets, viewers. We've seen that level being tested that Vaishali was talking about, 23,430. It's now hovering around 23,415, 116 points lower. So on the Sensex, we are down 600 points from the day's high. That's nearly a 0.8% fall from the day's high as well. When we look at the Nifty Bank also, that's also slipped 166 points from the day's high. That's almost a 0.3% of a fall. Again from the day's high as well. Mid caps have slipped nearly 500 points from the day's high, a 0.9% of a fall. So the broader markets are feeling deeper pain on that front. Nifty, of course, down 0.7% or 163 points from the day's high as well. That's how the trend is weakening, and now we are close to testing 23,400, 130 points lower in trade. Vaishali, how would you look at the Nifty?
So I just told you that if Nifty breaks 23, 460, 450, it's a sell. So that's what we are witnessing. And now we would look at probably 23,350 to 23,300, 23,200, and even if it further worsens, 22,500.
Okay, got that. So we could be looking at a 23,200 also if this trend continues to weaken, or worst come scenario 22,500 is something on the downside that could now be seen as a possibility. Keep an eye out on this, viewers. We've started off another week on a weaker note, 136 points lower. We've tested 23,400 on the downside right now. Nifty Bank has slipped about 1/10% lower in trade. IT is now down 2.6%. Let's look at IT. It's being hammered. All the stocks were already lower, but now they are further falling in trade right now. Let's look at the quantum of loss that is being seen on this one. LTI Mindtree is down 4.5%. Wipro is down 3.3%. Infosys down 3. We have TCS that's also down 2.1%. LTTS, Emphasis, Tech Mahindra down 2.5% each. Coforge, Persistent, and it's across the board large caps and the mid caps that are falling in trade. Let's look at the index contributors. That's the thing that we should be really looking at this point in time. on the downside. Infosys is contributing 40 points on the lower side, viewers. 150 points nearly now down on the Nifty, 23,386. It's worsening by the minute as we speak. Reliance Industries is contributing 24 points lower in trade on the Nifty. TCS about 20 points. Axis Bank 9 points. HCL Tech 9 points, ICICI Bank about 6 odd points in trade. Large part of the fall that's coming in is from the IT space, from Reliance Industries and from heavyweight banks like Axis and ICICI Bank as well. So that's the kind of contribution. IT is being definitely punished in this point in time. Vaishali, will it be catching like a falling knife within the IT space, or does anything really look positive?
See, IT actually the trend is just getting damaged. So if Nifty has to fall further, then I think IT will contribute. So I think when the trend is getting damaged, I don't think, and HCL Tech and all for some time, the target has been met with. So I don't have any new buying strategy right now, but I would say focus on all the sectors once Nifty comes towards 23,200 to 22,500. I guess that is the time when most of the sectors would show a good corrective move, and we can expect a good bounce and good level to start with. Else,
Okay.
do an SIP from here.
Do an SIP. Any key sectors or stocks that you would advise an SIP in, Vaishali?
Well, so TCS is a good level to accumulate the stocks which have not really participated. Then HAL, as we see that, there isn't much of a weakness in the trend. So I would right now focus on stocks which are not damaged yet as in trend. So currently even Mahindra and Mahindra is still holding intact. So very few stocks right now. As we mentioned, HDFC Bank, all these stocks look quite comfortable even now.
All right, then Vaishali, thank you so much for being with us on this morning edition to help us through the market trend right here, and how should investors be really looking at this corrective move. This has to really see how this really goes on forward from here. Will we see a bounce back, or do we see this trend worsening, is something we have to keep an eye out on. Vaishali, thanks a lot for sharing with us all your thoughts. Pleasure is always ours
Pleasure.
to have you on Business Today. 150 points lower on the Nifty, 23,382. But keep in mind what Vaishali has pointed out. If the trend continues to weaken from here, you could see 23,200. If further sell-off comes, she would not rule out a 22,500 on the lower side as well, viewers. So that's something that you should be really looking at. The trend is continuing to be on the downside. IT stocks now down 2.7%. IT is the weakest link in the markets right now. Of course, all the heavyweight counters that are contributing sharply on the lower side for the markets. You also have banks lower, 0.3% of a cut on the private sector banks. PSU banks down 1.4%. Oil and gas, of course, with that move on the gas allocation coming in, is a key dampener for all the city gas distributors, and therefore you can actually see double-digit loss for most of these stocks within the city gas distributors. The government has announced more cuts in the supply of domestic gas to CNG retailers, and this is for the second time in a month that they have cut the supplies for cheaper domestically produced natural gas to CNG retailers, and therefore IGL has got domestic gas allocation for meeting the requirement for volumes at the price fixed by the government, which is presently at $6.5 US dollars per million British thermal unit. Look at an IGL or an MGL right now, there would be sharp cuts on this one now, 18.6% lower in trade. This is definitely going to be impacting the profits of these companies. That's the expectation. IGL, the firm that retails CNG for automobiles and piped cooking gas to households in the national capital and adjoining cities, has already pointed out that domestic supplies have been cut by about 20% effective November 16, and therefore you can actually see this sharp downfall coming in now, 19% lower for IGL. That's a pain point. So oil and gas is lower, IT is lower, banks are lower, broader markets are also showing a lot of dampness. Metals, they are losing their gains as well. Remember, it opened with 1.5% gains. It's now holding up to 0.9% of gains. The realty is just now holding up to 0.2% of the gains. So let's look at the realty index as well, how it has slipped. You can actually see the gains were much higher, and now just within half an hour of opening, it's now at the lowest point, holding up just about 0.2%. So the strength is just not there. Look at the India VIX. That's important to really look at right now, viewers. It's up by 7.4% at 15.8. So the volatility index, which is the fear gauge, is also pointing in to a heightened volatility going forward from here. Things really not looking good. Let's hope things improve from here on as far as the markets go, as we inch closer to the half of the trading session, or the midterm. Let's see whether things show some kind of an improvement. But right now, as Vaishali clearly pointed out, that the trend is just not getting clear. 23,378 right now. Most of the experts are advising you to keep your calm. Look at the market trends getting settled and stabilized. Do not get into an aggressive buying zone right now, or on selling zone also right now. But keep in mind that your regular SIPs have to continue, and this is where your portfolios will get benefited. If you continue to add some more into the SIPs and have that kind of a confidence in the long-term story of the markets, that's when your portfolios will get sharper recovery. So continue your SIPs right now. On the markets, clearly on key stocks and sectors, don't be very aggressive on either the buy or the sell side right now. We'll wrap it up at that on the morning edition of Market Today, but a whole host of conversations with top market masters will follow through the course of the day. So stay tuned with us on Business Today Television.
He is a billionaire. He is one of the world's richest men who sells clean energy, green cars,